Welcome back to another trade video. If you're new to the channel, I usually do weekly videos going over my trades for the week and talk about what trades I'm taking for the following week. This video is part of a new series where I talk about option strategies that I use. And in this video, I'm going to be going over my top 5 tips for trading cash secured puts in Thinkorswim. And I might do a version of this for Robinhood as well, but these top 5 tips apply to the strategy and can be used on any platform. And before we get into that, don't forget to like and subscribe so you can stay up to date on all of my trades. This video assumes you have a general knowledge about what call and put options are and you know about buying and selling options. If you don't, I highly recommend checking out some online videos about those topics before watching this, and I'll probably release a video in the future going over the basics of stocks and options as well as some of the basic terminology that's needed to watch these kinds of videos. And now, jumping into my top 5 tips for selling cash secured puts. Tip number 1, you want to pick stocks that you're okay with owning. So for example, the reason you want to pick a stock you're okay with owning is when you sell a cash secured put, you could end up getting assigned shares of that stock. And for every contract that you sell, you could get assigned 100 shares. So for example, if I was selling a cash secured put right here at this red line, and let's say the price fell below, I could end up owning 100 shares of Apple. And the reason you want to be okay with the stock that you're selling on is because the stock could tank and go down significantly. So you want to own stocks that you're okay with holding through those kind of dips, or if you want to cut your losses, that's possible as well. For me, I like to kind of do this on stocks that I believe are going to do well and will eventually recover, even if they do have a crash or dip. So for example, some of my top picks are Apple. I also like to look at TQQQ because it's diversified across multiple companies, as well as AMD. And these are just some of the examples that I look at. Strong companies that even if I was assigned shares of the stock, they will eventually recover based on my opinion. Now jumping into tip number 2, you want to make sure you pick a strike price that you would be okay with buying the stock at. So for example, if we're looking at Apple here, I could pick the 126 strike price. So let me go ahead and move this line right there. But what this means is if the stock price goes below my cash secured put contract that I'm selling and I do end up getting assigned, I would need to buy 100 shares of Apple at the $126 strike price. So that would be 126 times $100. So I want to make sure that I'm comfortable buying Apple at this price and I feel like this is a good price. For example, I wouldn't want to sell right now immediately at where Apple is at 129. I feel like it has a little more downside, so you always want to pick a price that you feel comfortable with. And kind of on a similar vein, the third tip is make sure you have enough money to cover the purchase of the stock, or you have enough money to roll the position, which I'll talk about in more detail in a future video, but kind of talking on that first point. For example, again, if I did sell the $126 cash secured put and the price fell below and I ended up getting assigned, I would want to make sure I have enough money to buy Apple at that price. So that would be $126 times 100 shares per option contract that I sell, which would be $12,600 in my account. Showing another example of this, if you look at AMD, you can see, for example, let's say we take the $87 strike price. I want to make sure that I have enough money in case I do get assigned to buy 100 shares of AMD at the $87 per share price. So that would be $8,700. And now jumping into tip number 4, you want to make sure you're selling the right contracts. This may seem obvious, but because option chains are pretty confusing when you look at them, you always want to check a couple of parameters before you make that sell for the contract. So for example, some of the top things that I like to check are, first, I like to make sure I'm looking at the right type of option, so either calls or puts. In this case, cash secured puts, you want to make sure you're looking at puts. The next thing that I like to check is, am I trading the right expiration? So in this example, I'm looking at the 12 days out expiration, but depending on what you want, you can pick that expiration. The next thing that I like to look at is to make sure I'm trading the right strike price. So in our example, we've been looking at the 126. So I want to make sure that I'm looking at this specific row when I'm looking at the prices as well as the strike price. And then when you actually sell the contract, you end up clicking on the bid price using Thinkorswim. This might be different in other platforms. And the final parameter I want to look at is the quantity. You always want to make sure that you are checking that you have the right quantity set. You don't want to end up selling more contracts than you can afford to do, and then that could lead to pretty bad situations. So the top things to check when making sure you're selling the right contract are make sure you're looking at the put side, make sure you're looking at the right expiration, make sure you're looking at the right strike price, and then make sure you're also looking at the right quantity. The fifth and final tip for selling cash secured puts is trying to sell your cash secured puts near a support point. The reason for selling near a support point is because this is a point where price has historically bounced off of, so you have a better chance of the price not going below your cash secured put and you getting assigned on the position unless you want to be assigned. So for example, in this case, looking at the chart on Apple, you can kind of see the price has been bouncing off of this 126 line a bit. So I would love to sell a cash secured put at or below this 126 point, because in my opinion, even if the price does get down here, it has a good chance of recovering and pulling higher. And again, this isn't a guaranteed way of looking at it, but it does kind of give you a higher probability. But as always, you can't always trust past performance to determine future performance. But this is one of the things that I look for when selling cash secured puts. And as always, if you have any questions or comments, feel free to leave those down below. And don't forget to like and subscribe so you can stay up to date on all of my weekly trades as well as any future option strategy videos. And if you have any questions or want to see videos on specific topics, feel free to leave those down below. And as always, I'll see you all next week.